Hi, my name is John Stevenson, and welcome to the Guaranteed Retirement Guys show. So today we're going to be talking about the best fixed index rates for annuities. So index rates are different than other types of rates. You might have a rate of withdrawal for income. You might have MIGA rates. You might have fixed rates for SPIAs and DIAs. We're talking today about the best fixed index rates, and I want you to know what they're paying and which index to choose. If you're looking at certain companies, maybe your advisor's trying to push certain indexes or certain companies, you may not know what's going on with those indexes. And there's a lot that goes on with some of these indexes that people are not aware of, and they're not aware of how they work. I'm going to show my screen, and I'm going to break this down for you so you can see how these work. Okay, and I'll talk about the income after this, but I still wanted you to see what the indexes were as well. So this is showing fixed index, okay? So if we look at these, there's a lot of different indexes out there. So we've got year to date, okay? We've got 1 year, we've got 3 years, 5 years, 10 years, so on, okay? 2023, 2024, and then since inception. Since inception is the most important thing to me, because I like indexes that are as old as possible, because if they're like started in 2023 or 2024, and then they show returns of 10 years, they're all back tested. Okay. And so if you got back tested returns, you've got slippage that they don't even account for. And a lot of these orders are never filled. Okay. And so they're not true returns. Okay. So just remember that when you're looking at indexes, and if the index is inception was 2024, maybe you should look at something else. Okay. So I'll go down here. I see inceptions. See, some of these, they don't even have a date for inception, so we could look at those, and they might be really, really new, okay? Since 1991, that's not bad. Bloomberg commodity trackers, yeah. So you can see now the red years, you're not taking any of those losses, so just remember that. So when you have down years, your account just stays right where it is, okay? So, all right, so I'm looking down here. Let's see, since 1986, that's pretty good. All right, so lots of ones. There's thousands, okay? All right, so I'm going to go up here and say, okay, well, what's the top one? The top one is LBMA, okay? And this one, it's been around for a while, 25 years almost. So 24 years going on the 25th year. So if you look at that, say, all right, well, 1 year, yeah, that's pretty good. 3 years, 5 years, 10 years. 10 years, 9%, not bad. So that's kind of what I like to look at. I says, all right, so the average is 9%. Okay. iShares gold. Some people want gold. 8.94. You got some more gold. You got commodities, which wow, look at that. Average 10 years. Not much. So you probably don't want to do that one. Okay. Let's see. This one, not very much for 10 years. This one, 7.64, 2.75, and so on. So 11.2. Okay. S&P 500. We already know that. That's done well. So that's a solid index. Okay, so we're looking at that and say, okay, well, this is in 3 accounts. So I'll click that one. There we go. All right, security benefit. So solid 1 year S&P 500, participation rate 90%. Okay, account fee almost 1%. And there's a spread of 3. So you have to remember that as well. So if it gets 20%, you're going to get 18% minus the 1 minus the 3% spread. So really, you're getting 14%. Still pretty good return, especially when you're not having any market risk when the market's down. So you just have to remember some of these will have spreads. Some of these have a combination of spreads and par rates and cap rates. Some of them will only have one of them. It just depends. All right, so I'll go down and look at these and say, all right, well, Marico is giving me a 5-year one, participation rate of 99%. Well, that's great. And so it'll just measure whatever the S&P does, okay, from now until the end of 5 years, and it'll give me pretty much the whole thing, 99% participation rate. So they're basically making a little bit, but they're giving me a lot. So that's pretty good. Just you have to remember, you will not have any interest credited until the end of the 5 years. Okay. All right. Life of the Southwest, I really like them. They are a great company to work with. I've seen their rates and they stay high most of the time. I mean, when you're talking about reset periods, they usually don't reset them much lower. Sometimes they'll reset them higher. Okay, Life of the Southwest. This is probably one I would recommend specifically with National Life Group because they're giving you a cap of 14% with an account fee of 1. So that's very easy to understand. If the market does anything higher than 14, you're always going to get 13%. Okay, if it does 20%, you're going to get 13%, right? So you just have to remember that is what it's going to be. But it's pretty nice when you got the down years and you're not losing anything. So usually when I am selling index annuities to someone, I encourage them to look at indexes, and I'll show you indexes that either have a well-known index like S&P 500, NASDAQ, and there's some other ones that have been around for a while. Choose those ones that have a real record, and also maybe look at putting most of your money into a 1-year period instead of like 3, 4, 5 years. Because what if you have 3 or 4 really good years, and then the last year, let's say it's a 5-year period, point to point, you might have that year wipe out all of your gains in the beginning, and you end up with 0 gains, 0 losses, but 0 gains. And in my opinion, even though you had 0 losses, you still had that loss of time. Okay. So put it in an index, at least, a large portion of it into an index that it's at least, a 1-year point to point. Okay. So just measures that. And then you have more crediting periods and more chances for it to compound. Okay. So that's really, really important when you're looking at the best index. Okay. Now with indexed annuities, you can also attach income riders. And a lot of people want income. They want highest income for retirement. So a fixed index annuity usually is the best option for income. You might not, you might not have heard of that. Maybe you thought, well, I thought a SPIA or a DIA contract was better. They're good. They'll give you high income, but usually not as high as an income rider. And they don't give you the flexibility either, because an income rider, you can buy it and you'll have guaranteed growth. And you might decide to turn it on in 8 years or 9 or 10 or 12 or whenever. Okay. You decide, and you can change your mind whenever you want. With a SPIA or a DIA, you choose a date and it is set. You can't change it. All right. So I'm going to go and show you those right now. So we'll go to the income rider, and I'm just going to keep everything the same. Okay. No income reduction. And I just put it out 5 years. I mean, you don't have to wait till 70, but obviously if you wait till 70, you're going to have higher income, and I'll show you what the immediate payout as well. Okay, so these are same contracts, fixed index annuity contracts. They give you growth in the index when the index goes up, and they will protect all of your principal against loss if the market goes down, because these are call options. So they're buying call options, and if the market goes up, they're going to exercise those call options and make a profit for them as well as you. But with an income rider, you have to realize they're going to charge you a fee for the rider, which is, I don't know, in my opinion, it's fine, because if I'm paying $70,000 over my lifetime in fees and I get another $500,000 in income because of those fees, it's worth it. So, all right. So $500,000, Arizona, and I'm married. Okay. I'm 65 years old, and I'm going to take income in 5 years. All right. So you see all the top payouts right now. So nationwide, $55,000 guaranteed for the rest of your life and your spouse's life. Okay. Followed by Corebridge, Athene, and so on. So, decent payouts. If you want that biggest company in the world, Allianz will pay you $48,000. You don't have to do that, but some people with the larger premiums prefer that. Okay, so I'm going to go back up and say, well, Nationwide's A+. I think I'll do that. So $55,000 a year, take that out for 30 years. Well, you do the math. You're doing quite well, right? Like what? $1.6 million in income. So you're trading $500,000 for a $1.6 million pension. If you live longer, you get paid more. Okay, so, but what if I want income now? I don't want to wait. I want income next month. Well, it's definitely going to be less. So let's see here. Yeah, $35,700. So that's the cost. The cost is if you take it early, they're not going to give you as much because they don't have as much time for it to grow. Keep that in mind. So let me push this right back out to 70. And I'm going to go in. I'm going to kind of show you the nuts and bolts of this real quick. So I'll go to Nationwide, which is the highest one. And again, you might be 60 or 55 or 50 or older, and you want to see what it'll do for you and your goals. Maybe you want income now, maybe you want income in 5, 6, 7, 8 years. Okay. Go to my website, johnstevenson.com, and you'll be able to see my annuity calculators there. Okay. The income rider calculator will show you the highest income, but you got access to all of my other calculators as well. Okay. And that gives you access to everything. All right. So let's look at how this actually works. So here's what you have to keep in mind. You have two accounts, really. You got the fixed indexed account. That's your actual cash value. That's your death benefit. That's if you cancel the contract, you take your money out. Okay. And then you got the benefit, the income benefit. That's the income rider that you're being charged for, but you get a lot for what you're being charged for. Okay. With that said, here's what I wanted to show you. So the beginning contract value, yeah, it's $500,000. You can see not a lot of growth. It's not. Okay. It's not made for growth. This is not a growth product. So if you're looking for growth, we'll go back to the other indexes and do a pure FIA product with the index, okay? Or a MYGA. MYGA's worked as well. So with credit interest, you can see, let's say it earns 6.5, and this is just showing the S&P 500 with a cap of 6.5. So that's why you can see that. And the zeros are the years where it's down, where it's not making any money. And then you can see the rider charges. See the rider charges? Yeah, you're paying rider charges, but they only last as long as the account does. So just keep that in mind. So yeah, you might pay, in this one, you're paying quite a bit. Okay. You're paying, what are you paying? You're paying what, $130,000, I would say. Yeah. In fees. So, and if you look at the benefit base, it grows from 648 to 840 guaranteed. And the lifetime withdrawal rate is 6.55. And when those are both multiplied against each other, it gives you that $55,000 a year for the rest of your life. So you might be thinking, wow, $130,000 or $140,000, that's a lot in fees. Yeah, it is. So then we'll go back here and say, okay, well, I don't want to pay any fees. All right, that's fine. I say no rider fee. We want the highest income though, but we just don't want to be charged for it. Okay. All right, so $33,859. We'll just round it to 34. Okay. So 34, what is the difference there? That is quite a bit of difference. Okay. So yeah, that's fine. You can get $55,000 with the fee, okay? Minus 34, that's a $21,000 a year difference. Times that by 30 years, that's $630,000 less in income. So you be the judge. Would you be willing to pay $130,000 to a company and then have you get $630,000 back from them in income? Okay, you got a net $500,000 return. Okay. So if you're looking for income, usually it makes sense to pay the fee, but it doesn't matter to me. Like my commissions don't change. Those fees go to the insurance company. So it doesn't matter to me what you get. But if you're looking for highest income, it's usually a no-brainer. Like for me and my wife, our annuities, I don't care about the fee. I don't care about the account balance and go down to zero for all I care. Okay. What I want is I want the income. Okay. If I know that my pension income is taken care of and my wife's taken care of when I die, that's all that matters to me because I'm not using that account for legacy. If you want an account for legacy, set up a pure FIA, a fixed index annuity contract over here with no income rider and let it ride. Okay. You can do that. You can protect your principal and protect your money against market risk and you get lots of growth. Okay. You can do that and leave it as a legacy. But if you want income, then choose the income rider or a SPIA or a DIA contract. Okay. If you do that, you're going to have guaranteed income. And no matter what this account is doing over here or not doing, at least you know the income is covered. So you can ride the market if you want to throw your money in the stock market and ride all the gains and losses and know that over time it's going to grow. That's fine. You can do that because you have the peace of mind over here from your annuity income contracts. So, all right, that's all I have to say for that. But I just wanted to share with you the top fixed index annuities. So you can see those rates, but I also wanted you to be able to see the top fixed index annuities with the income riders and those rates. Okay. And rates right now are very good. And that's why income payouts right now that you can secure are much higher than you could a few years back because of the rates where they are. And that's why people are securing lots of income for themselves because it's just a good time to do it. So if you want to book a call, there's a link below this video, it goes directly to my calendar. If you want to go to my website, johnstevenson.com and plug your info into the calculators there. It'll give you access to everything that's available. And if you want to book a call, please do so. So I won't try to hard sell you anything. I hate being sold and I know you do as well. So I'm going to show you everything that's available. I will educate you. I will answer your questions. And if you decide to buy an annuity, I'd love to help you. So I really appreciate you watching. It's viewers like you that make this show possible. So if you like it, please click the like button. Please share it. Please comment below. I'll answer. And I look forward to seeing you next time.